Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady and principal owner of Everett Tax Solutions, where we help you win the tax game. Home Biz Tax Talk airs Monday through Friday, and when you tune into my show, you're going to hear about topics that are important to the home business community. Today, we're talking about how to pay these back taxes. But even before we get there, let's talk about how people are getting into tax debt. And this is going to be really important, I believe, going into the next year, all because 2020 has already been so funky and it's caused a lot of financial drama for people. And there are, people like, hey, I've lost my job. You got your side hustle. You might have driven for Uber or Lyft. You may have done Uber Eats. You may have started your own particular side business, whether it's a network marketing business. It could be, you could have been baking cakes, whatever. People had to get creative in getting this income into their homes in order to live, okay, which is great. However, it's the part that you don't know that's going to get you in trouble, which is all about these taxes. So the way that people are getting into tax debt are really three main ways. Number one is not enough withholdings in your paycheck. Like I get, you hear people about, shifting your income, which that has some truth to it. However, you have to understand why you're getting a refund anyway, okay, before you go shift too much. Because some people think, well, I've been getting a refund all of these years. I don't owe taxes, so I'm tax exempt. And that is not true. You have to know why you're getting that refund. It could be because of a tax credit, or it could be because you have overpaid. So understanding why you get a refund is just as important as you deciding that you don't owe taxes and you're exempt, because 9 times out of 10, that's not true. Number two is not paying estimated taxes. This is for my high income earners and mainly my business owners. When you have a profit in your business and you are your own withholding person, right? When you have a job, you have taxes that are automatically taken out of your paycheck. As a business owner, you are the personal person that's responsible for withholding those taxes. So if you don't withhold those taxes, reserve those funds, and then you don't pay your estimates, you wind up getting in tax trouble. And high income earners as well. After a while, you don't have enough deductions, okay? That's just the way it is. And so even though you may have withholdings coming out of your check, you might need extra, okay? That's called extra withholding. There is such a thing. So if you're not paying those estimates though, and you're not having that extra withholdings, then you wind up in tax debt. And third is really the side hustle squad that is not reporting their income. These are the people that are getting paid on, using PayPal, Zelle, Stripe, all these other, payment processors, Cash App, Venmo, and all of that, thinking that, okay, if they don't have to report the income, I don't have to report the income. And that is simply not true, because these payment processors do have reporting requirements. And you, regardless of whether or not you meet the reporting requirements for them, their threshold, you are required to report the income yourself, okay? And what's happening is that people are getting these tax forms going, oh, that's cute, I made money, ha, 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 not understanding that these same forms go to the IRS, and the IRS is simply waiting for you to file your taxes. And then when you don't, they send you a tax bill saying, hey, you owe us money based off of this money you made here on PayPal or Cash App or whatever. We want our money, please and thank you, okay? And a lot of times it's not even intentional. It's that people just don't know, which is why I'm making this video. Okay. So those are the main ways that people are getting into tax debt. And you might even say, well, hey, I didn't even make that much money anyway. It doesn't matter. Okay. It doesn't matter. You still have to reserve funds for taxes. Now, the IRS has 10 years to collect a tax debt. Okay. Now, you might think that's a long time, but these states got 20 years, okay? There are a lot of states that take 20 years to collect the tax debt, but we focusing on the IRS today because every state has different rules. But now that 10 years, it doesn't start until the date of assessment. And what that means is, let's say that you had a tax debt for 2015, right? But they don't actually assess the tax debt until 2020. Well, then that means they got until 2030 to collect that debt. Okay, so it's from the date of assessment. And another thing that you also have to understand is that the general rule is that you have to be in compliance with your tax filings. In compliance means the previous, the most recent 6 years. So you can't have all of these unfiled taxes and think that the IRS is going to work with you. They're not. This is exactly why you file your taxes even if you can't pay the bill, okay? And if you file your taxes on time, even if you can't pay the bill, you automatically save money because you're skipping that failure to file penalty, which is more expensive than the failure to pay penalty. Okay? Help me out. All right? So file your taxes on time. All right. So now, 3 ways to pay your taxes, and we'll go through each of them briefly. So the first one is an installment agreement. Number 2 is being an uncollectible status. And number 3 is the offer in compromise. And that's the one that everybody here knows about the most. So we'll save that one for last. All right. So an installment agreement. An installment agreement on the streets is known as a payment plan. That's when the IRS allows you to pay back your tax debt in monthly installments. Now, there are financial guidelines because you gonna have, a $10,000 tax debt and you over here trying to pay $20 a month. That's not gonna work out. The IRS has specific guidelines. It's their job to collect as much as they can, as quickly as they can, okay? While you over here trying to not pay anything at all. So but with these installment agreements, you agree on a monthly payment and then the IRS is okay. And you make those monthly payments. Now, it is super, super duper important that if the IRS approves your payment plan, that you make all of your payments. And if you can't for some reason, okay, like I said, 2020 has made life very interesting for people. And so if you can't make that payment, you definitely need to reach out to the IRS or have your representative reach out to the IRS if there's a problem, okay? Because a default on a payment plan means that the IRS will cancel that payment plan altogether and you are back to square one with dealing with this tax debt, okay? So if you get the payment plan approved, make sure that you stick to it. If you can't, you need to reach out to the IRS or have your representative reach out to the IRS. Okay, number 2, the uncollectible status. Now, will you're in the uncollectible status, say that 3 times really fast. You have no equity, you got no assets, you don't even have enough money to cover your allowable living expenses. Now, while you're thinking uncollectible might sound cute, I want you to think about the financial space that you have to be in order to be in that uncollectible status. You're not sitting up here walking around with a bunch of money and being in the uncollectible status. It doesn't work that way, okay? So, but while you're in the uncollectible status, what is good about that, if you will, is that the 10-year statute continues to run, and then there's no further enforcement action as long as you're in this uncollectible status. But keep in mind that the IRS reviews your status annually to see when you can afford to start paying your taxes again. So an uncollectible status is not a permanent status. It's not like you're uncollectible in 2020 and then you get this banging job in 2021 and you're still considered uncollectible. Okay, that's when you might go to an installment agreement or something like that, but you're no longer in uncollectible status. Okay. And then number 3, and this is the one that everybody hears about the most, the offer in compromise. This is when you see those commercials where the couple is standing there smiling. We owed $40,000 and we called XYZ and they settled for $500 and our lives have never been better. It is so not that simple, okay? So what is the offer in compromise? That is when you and the IRS come to an agreement on an amount less than what you owe, okay? But it's not as easy as it sounds. You're not going to be sitting here on, $500,000 worth of equity in your home and you owe $30,000 and you think they're going to go, no, that's not how that works, okay? With the offer in compromise, there are still the stipulations. You have to have at least the last 6 years of your taxes filed, okay? And you must be current on your tax payments. That means you have withholdings. You've made your estimated tax payments. You're current with those, right? So it may require you to come out with a bunch of money to begin with, right? If you haven't paid your estimates and all that stuff. So, but with the offer and compromise, again, it's a process. They're looking at your finances and saying, okay, what is an acceptable amount? Because remember, the IRS has 10 years to collect. So if based on your numbers, they can collect all of their money within 10 years, guess what? No deal. Okay. So it's not like you say, okay, well, hey, IRS, I owe you $15,000. I'm willing to pay you 1,500. And the IRS is going to say, okay. It does not work that way. As a matter of fact, the majority of offers in compromise get rejected from the IRS because people are just throwing numbers out there and thinking the IRS is going to accept that. That's not how it works. Okay. It's just not. So, and here's some other things that you need to know. When you're working out this process, you cannot continue to incur tax debt. That means if you're not having enough withholdings in your paycheck, you're going to have to increase those. If you're not paying your estimates, you're going to have to pay those estimates. And even while you are working something out with the government, you still need to be making payments towards that tax debt. Okay, because it's not going to go away. And during this time, when you're, whether you're in an installment agreement, you're working out an offer and compromise or whatever refunds you get during those years, they will be held by the government and applied to your tax debt. So you're not going to say, oh, well, I have a payment plan and get tax refunds. No, they're going to put put that refund towards your tax liability. And then the last word of warning is this: do not try to hide income and assets from the government. That is tax evasion. Okay? Because what people do during this time, because they don't want the IRS to see their money, they don't want to increase the payments or anything like that. That's when they try to operate in cash, get paid cash for things, pay for things in cash, all of those things to try and fly below the IRS radar. It does not work. It may work for a time, but don't do that, because that's tax evasion and you'll be prosecuted. Okay? So, the best thing to do is, of course, try to avoid getting into tax debt, period. If you've got a side hustle, reserve your tax money and pay it. Nobody likes paying taxes. Nobody. I don't care who you are. Nobody likes paying taxes. However, it is way better to be able to be angry and write that check than to be angry and have no money and then have to go through this process. Because again, the financial damage that this does to you, because this ends up on your credit. Okay? When the IRS, they will file liens. When the IRS filed liens, they file liens against what you have and also what you can acquire in the future. So you have to get this taken care of. And people hear about levies. Levies is when the IRS comes and takes your things. Yes, the IRS can take your wages. They could also take the money in your bank account. So understand that, yes, the IRS is the longest reaching arm of the law, and this is why you stay in good standing as much as possible. Okay? And, and then if you do decide that you want to try to hide this money from the IRS, then you wind up in jail. But even if you go to jail, the tax debt will be there when you get out. So let's just not go there at all. Okay. So listen, I hope this helps you out. Definitely hope this explains things a bit for you about how these different types of plans work. You guys, listen. IRS tax debt and stuff is really not to be played with. Whether it's IRS debt, state tax debt, is not to be played with. I can't tell you that. I can't emphasize that enough. Let me say that. So, file all your taxes on time, even if you can't pay. At least if you can't pay, your taxes are filed, you can work something out with the government. Plain and simple. Okay? So thank you so much for tuning into Home Biz Tax Talk. Again, we air Monday through Friday, and you can come right here to get your questions answered about your home business taxes. All right. Have a great day, and I will see you all next time. Bye.